Are you thinking of buying an investment property, but you're not sure whether to buy in your own name or a limited company? Making the wrong decision can cost you thousands in tax and mortgage costs. But don't worry, by the end of this video, you'll know which one suits you best. Whether you're a first-time buyer or you're scaling up, I'll break it all down for you. So let's get into it. Welcome back to my channel. So if you're new here, I'm Nebi and I help people like you build profitable property portfolios. So if that sounds like something you're interested in, feel free to hit that subscribe button as I upload videos multiple times a week. Also, you want to stick around to the end of this video as I'll be sharing a mistake that I nearly made that could have cost me a lot of money. Now before I dive into the video, I want to make a quick disclaimer. I'm not a financial advisor and I'm not a tax expert. So before you make any investment decisions and choosing between whether you want to buy in your own name or a limited company, you want to make sure that you seek professional advice. So let's actually break down the difference between buying in your own name and buying under a limited company. So first, ownership. So if you buy under your own name, you own it. You are the owner of that property. Now, if you buy it under a company, the company owns the property. So you may own the shares and maybe the director of the company. However, you don't own it. The company owns the property. When it comes to tax implications, under your own name, rental income is taxed as personal income. So this can go up to 45% if you're in the highest tax bracket. If you're a limited company, then you'll be paying corporation tax, and this will be anywhere between 19 to 25%, depending on your profits for the year. And this can be lower than your personal tax. And then the mortgage options as well. So if you're buying it under your own name, then generally there are better deals, lower rates as well. And there's also more deals on the market. If you are buying a limited company, there are less deals. However, it actually has expanded quite a lot and the rates tend to be slightly higher as well. However, it can definitely be more tax efficient for some investors. Now let's look at the pros and cons of each approach, because trust me, there's no one size fits all. So if you're buying under your own name, the pros are that you'll get better interest rates. Like I mentioned, the mortgage rates tend to be lower when you're looking to buy it under your own name. Also, there's less admin, so you don't have to set up a company, you don't have to hire an accountant, you can just buy it under your own name with less hassle. Now, the cons are if you are a higher rate taxpayer, you are going to be paying a high tax on that rental income. You also can't offset the mortgage interest as well. So if you purchase a property and you purchase it with a mortgage, then that mortgage cost that you're paying every single month, you can't actually offset that as an expense. So it's the whole rental income that you receive that will be taxed at your tax rate. Now let's look at the pros and cons between buying through a limited company. So first of all, if you are a high rate taxpayer, then it's going to be a lot more efficient in terms of actual tax. So your tax is going to be anywhere between 19 to 25%. And if you're not actually making that much profit, it's likely to be 19%, which is a lot more tax efficient than if you're paying 40 to 45% if you purchase it under your own name. The mortgage interest is also fully tax deductible as well. You can actually expense that off the rental income, and then it's only the difference between that and the mortgage interest that you'll only potentially have to pay tax on. Those profits can also obviously be reinvested back into the business and it can enable you to purchase more properties. Now the cons are there is a lot more paperwork, so you have to obviously set up the company, you're going to have to work with an accountant, pay an accountant as well to actually ensure that you're filing your accounts properly and in a timely fashion. In addition as well, the interest rates do tend to be higher, so that's something that you want to factor in. These are some of the key things to think about before actually choosing which one is better for your circumstances. So if you're someone that's only looking to purchase 1 or 2 rental properties and you're a lower rate taxpayer as well, generally in most instances it makes more sense to buy under your own name. However, if you're looking to scale your property portfolio and you're also a higher rate taxpayer, then generally it makes more sense to buy under a limited company. Now for me, when I was thinking about buying my first investment property, I was actually thinking to buy it under my own name. It's only when I actually spoke to other more seasoned property investors and they understood that I was really looking to scale my property portfolio that I then chose to actually purchase under a limited company. And doing that has been a game changer because it's meant that I can offset my mortgage costs, other key expenses as well. There's a lot of expenses that you can actually offset when you're actually purchasing through a limited company. So if I had actually purchased under my personal name, then I would have paid substantially more in taxes. The 4 additional properties that I purchased last year were also purchased under a limited company as well. In saying that, what's the key mistake you want to avoid? So I've actually seen a lot of beginners rush to set up a limited company and then have no real plans of actually scaling their property portfolio. Now, this is actually not the best approach because if your goal isn't to actually scale your property portfolio in the long term, then a lot of times it doesn't actually make sense to purchase under a limited company. And I think people do this because it sounds fancy. However, if it's not suited towards your goal, then it doesn't make sense. So to summarize, buying in your own name makes more sense for small scale investors. And buying in a limited company makes more sense if you're really looking to scale your property portfolio. However, it's important to run your numbers and ensure you're getting the right professional advice before making a decision. Now, if you do need help choosing the right strategy for you, feel free to book in a 15-minute discovery call, which will be in the description and in the pinned comment below. So I hope you found this video useful and you understood a little bit more about the differences between buying your own name and a limited company, and it helps you understand a little bit more about which option may be more suited for you. So if you enjoyed this video, do give it a like, and if you found value from this video or any other video on this channel, then do subscribe as well. And until next time, happy investing.